Okay, people keep asking me what this adjusted net profit number is, right? At Simple Numbers, we've created this term called adjusted net profit. And really all it is really truly looking at your business from the lens of a health perspective, not just through the tax lens, right? I always tell people there are two lenses in which you could review your numbers through. The first one is the tax lens. That's all about decreasing on paper your tax liability, making it look like you make the least amount of money possible. How do we do that? Well, one, if we're an LLC or an S Corp or something like that, we're taxed as an S Corp either way, and we have to pay ourselves a salary. Well, is that really an operating expense? No, we need to remove that from our operating expenses because it's making us look like we're spending more money than we actually are. In reality, that is just profit we're paying ourselves in the form of a salary to keep the IRS happy. And it's a good tax strategy, but it skews the numbers and makes it look different than it actually is. The other thing is your indirect operating expenses, right? Your CPA is telling you to run as many expenses through your business as possible that you can legally get away with. Again, great tax strategy, skews the numbers, makes it look like you're spending more than you actually are, and your business isn't as healthy as it could be or should be. And you don't really know how much you're spending in each category of operating expenses because you got a bunch of these indirect expenses run through the business. The biggest impact into understanding adjusted net profit is that we have to calculate how much you would have paid on the deals that you as the team leader are doing if another agent did those deals for you. So in other words, if you were to step out of production and pay someone else to do your transactions based on the current splits you have with your team members, then what would your net profit be? Because that is the biggest impact into what your true net profit would look like. And most of you, if you ran the calculation that I'm about to share with you, you would be losing money on your business and you don't even know it because you don't have a real estate specific bookkeeper that understands these things and tracks your cost of sale and calculates your adjusted net profit. So you can calculate your net profit on your own. We provide it to all of our clients regularly and hold them accountable to it. But here's how you calculate it. It's a very simple equation. Your net profit on paper minus any unrealized cost of sale on owner's production plus owner's salary plus any indirect expenses you're running through the business. If you use that mathematical equation, it'll spit out to you exactly what your true net profit is. And then we're going to divide that by your total revenue, not just the revenue you got paid into your bank account, but the true total revenue your team produced. And that'll give you the real margin in your business. So for example, if that real margin is $100,000, we divide that by your total revenue. Let's say it's $1 million, you're at a 10% net profit. If you do that calculation and you come up with that dollar amount and you divide it by your total revenue, you are going to have your true net profit margin. If it's below 20 to 25%, probably not doing so good.